In the last video, I told you what are currency pairs and how to read the quotations of the currency or quote price of the currency. When I told you about the quotation, you must have noticed that there were two prices in front of the currency pair symbol. So why do we see two rates for a single currency pair? Like, how can there be two different rates for a single currency pair? Well, in Forex, the rate at which you sell your currency is different than the rate at which you buy the currency. And those rates are called as the bid rate and the ask rate. Let us try to understand what is bid rate and ask rate and also the purpose behind it. The bid rate represents the price that a dealer or the broker is willing to pay for a currency, while the asking rate is the price at which the dealer will sell the same currency. To understand this, let us take an example. Let us say you live in India and you are traveling to the USA, and for that you have to exchange your INR to US dollars. Let us say USD is the base currency of your broker. So when you went to exchange your INR for US dollars, the broker will offer you a rate to buy your INR and give you the US dollars. This rate which the broker offers you to buy your INR is called as the ask rate. Now let us say after few days you came back from the USA and you still had few dollars left with you. To exchange that dollar for INR, you again went to the broker. Now this time the broker will give you a rate at which he is willing to buy your US dollar and give you the INR. This rate is called as a bid rate. Now always remember that in the Forex market or any normal exchange market, the asking rate will always be more than the bid rate. That is, the broker will sell his base currency for more value and will always offer less rate for buying the same base currency. The main purpose behind this is that broker earns money through this process. And the difference between the asking price and the bid price is the profit that the broker makes. And this difference is called as spread. For example, in this chart Euro USD, the bid rate is 1.7937 and the asking rate is 1.7958. So to find the spread, we just have to subtract the bid rate and the asking rate. So the spread here is 0.021 or 2 pips. To sum up, in bid rate, the broker sells his base currency and buys a variable currency. So the bid rate is the price at which the broker sells his base currency. And this rate is lower than the asking rate and quoted on the left hand side. In asking rate, the broker buys a base currency and sells a variable currency. So the asking rate is the price at which broker buys his base currency, and this rate is always higher than the bid rate and quoted on the right hand side. And finally, the difference between the asking rate and the bid rate is called as spread. That's all for this video. Thank you.